Hello, hello, hello. Welcome to the Listen to This Bull live show. I'm Matt Mulholland. That is Remington Huggins. He is the sexier of the two of us. Probably it's the jeans. I have really ugly jeans on. So this is a show that we talk about bullshit in the insurance world. And this is the first time we've done this show in several weeks. So I'm happy to be back. So you got a Christmas tree up too.
Got the Christmas tree rocking and rolling just for Listen to This Bull. You know, you got to have props.
Got to have props. I have different props. I got a hat. So we are about to do this podcast on something that is going to be a big game changer in the state of Florida. This is about the special session bill that passed the Senate today about an hour ago. It hasn't passed the House yet, so it's possible it could be killed, but it probably won't be. And there were so many amendments that were pushed, and all of them were turned down. And it's kind of a fiasco. And we're going to go through all the bullshit that's involved in this. The point of this show, though, is to be conversational. If you have a comment, if you have a question, please post it in the commentary, and we will try to answer your questions as we go. So without further ado, let's get this thing started. Okay, so here we go. This bill is fairly atrocious. It is labeled Senate Bill 2A or House Bill 1, and Senate Bill 2A passed in its original format. And there's several things that are a big problem in this. And so I'm just going to name the major issues, and then we'll actually get into some of the language on there. Major issue number one, the worst issue in this, in my opinion, is that you have less time to file claims. You weren't expecting me to say that was the worst thing, were you, Remington?
No, I wasn't. I actually already wrote down an attorney fee statute.
Right. Well, of course, that's the most important thing for you.
No, you're right, though. When it comes to the okay, how about this? When it comes to the finances of the insurance world in the state of Florida, I think the attorney fee statute obviously is probably important. But when it comes to the overall population and policyholders throughout the state, I think you're correct.
Yeah, I mean, it's terrible. So I'm going to pull up that language real quick, and then we'll get to, well, no, I said I was going to read out all the major issues.
Yeah, you do.
You have less time to file claims, literally less time, 1 year for all perils, which is less than the vast majority of states. Attorney's fees, no longer paid. There are some situations in which an attorney's fee may get paid, but generally speaking, gone. There is, if you are part of the Citizens Corporation plan, there is now a requirement to have flood insurance. In order to have any benefits from your policy at all, you're required to have flood insurance. That's not been a thing before. There is new language in here for mandatory binding arbitration when it can be allowed in policies. And there wasn't any stipulation about it being tied only to surplus lines. So that's interesting. There is the killing of assignment of benefits. Gone. And then there's some interesting language in here that will allow the Financial Services Office to investigate carriers and possibly take a look at the policies that we have previously approved to be used in the state of Florida, and might be able to do some removal of some bad policy language again. So there are some silver linings in this. It's not all bad, but a lot of it is bad. It's really ugly. I'm really glad that Remington is on here, because Remington works in 2 states, Florida and Georgia. And the biggest difference between those 2 states is what?
Attorney fees, bad faith. Those are huge. I mean, I could go on and on. Appraisal, AOBs. I mean, seriously, I could go on and on. I'm currently right now in 7 states in federal court in 7 states across the country. So I have my thumb on the pulse on the legal industry and first party. And I literally in my mind, I have to, if I'm talking to counsel in Florida about a Florida case, I literally go to that section of my brain and start hammering out the Florida law, so forth. And then if it's Georgia, I do the same. But I have my thumb on the pulse of what's happening around the country and what states are best for policyholders, contractors, public adjusters, and attorneys, and so forth. So I hope I can give some insight on what's going on right now in Florida.
Yeah, man. So I'm going to pull this up, and I'm going to start with my number one thing, if that's cool with you.
Let's do it. Let's roll.
Here's the language for filing within 1 year. A claim or reopened claim, not a supplemental claim, just a claim or a reopened claim, which I thought was a supplemental claim. I'm not really sure now. You have to give notice of the claim within 1 year after the date of loss. For loss or damage caused by any peril is barred unless notice of the claim was given to the insurer in accordance with the terms of the policy within 1 year. And then if it is a supplemental claim, then you have 18 months after the date of loss. Year and a half. That is a significant reduction.
It is a significant reduction.
Not even Georgia has that.
No. And which policyholders is this going to affect the most? It's going to be roof damage, right? The part of the property that a policyholder or homeowner doesn't look at every day, or looks at maybe once every 12 months. That's who it's going to affect.
It's a surprising development. I even wrote a little comment in here. Holy shit! Because this is not in the synopsis. There's nothing about this, and the little breakdown that all the senators and House members are getting a copy of. This isn't in there, and the attorney's fees isn't in there. It's not talked about. Why? I don't know. It's bullshit that this isn't even mentioned in any of the synopsis. This is a big deal, and it's just kind of hidden in there. Can you imagine these situations?
Matt, what happens when a homeowner files a claim on the 11th month and the carrier doesn't issue a coverage decision until 4 months, 5 months later? How are they going to get their supplemental payment?
I don't know.
If there is to be one.
I don't know. All the carrier has to do is right at the end of 18 months, just close the claim. They don't have to give a reason. And now you can't do anything. After 1 year, if they close the claim after 1 year, you can't reopen the claim. So the language about supplemental claims and reopening claims and all this kind of stuff actually screws the policyholder over in these situations. If the carrier just sits on it for a while, you can't reopen it as long as they close it on the internally. What does that mean to a policyholder when they close it? In other states, it doesn't mean shit. Just reopen it. But now you have no time to do that. Yeah, I've never seen language like this in another state. This blows my mind.
Hey, Matt, and this is me asking some questions too, because I mean, if anybody's read this bill that's dropped, what is it, 200 pages? I mean, it's a lot of substance, right?
It's ugly. So Scotty says it passed yesterday. It didn't pass. Nolan was asking if it was approved. So today at about 5 o'clock, it passed the Senate on the floor. Yesterday, it passed committee. Today, it passed the floor vote. But it hasn't passed the House yet. So this is not law yet. So
I'm just telling everyone right now,
it's packaged for a law firm to put the carrier on immediate notice. I don't even understand that question.
What if the claim was packaged for a law firm to put the carrier on immediate notice? Good. I don't. When I say good, as in they're obviously abiding by this, potential new timelines. But
all right. So this is the issue that I think is going to cause the most grief for policyholders in Florida. But let's go to issue number 2, which most people will think is the real issue, and that is attorney fees.
Hey,
so
Matt,
it says.
Can I touch on the timeline real quick?
Yep.
So as of right now in Florida, there is a statute that if there is a named storm, a policyholder has 3 years to file that claim on a named storm. That was statute, right?
Right.
On a named storm. I want to know how much it affects that. And I was trying to say, like, this bill, there's a lot of substance in here. So there's going to be a lot of getting in the weeds on exactly what this amends, what this changes, and everything else. But I just want to throw that out there.
You know what? And you guys will have to forgive me because we haven't had much time to go through these pages. As I'm reading this a second time, it specifies eligible surplus lines insurer. So this might only be for surplus lines policies anyway.
Well, typically surplus lines aren't regulated by the state.
Oh no, so they're just not, the policies aren't approved by the state, but the insurance handling, the handling these claims is regulated by the state for a lot of stuff. Right. So in fact, if we go to the attorney's fees section, there is language in here that allows for attorney's fees for a surplus lines insurer. It says upon rendition of a judgment decreed by a court of the state against a surplus lines insurer in favor of any named insured or beneficiary or whatever, the trial court or on appeal, the appellate court shall adjudge or decree against the insurer in favor of the insured a reasonable sum as fees or compensation for the insured's attorney prosecuting lawsuit for which recovery is awarded. In a suit arising under residential or commercial property insurance, there is no right to attorney's fees. So strangely enough, you can get attorney's fees easier on surplus lines now. What happens in a state that doesn't get attorney's fees?
There's going to be a lot more denials. There's going to be less settlements prior to litigation. I mean, that's the leverage these policyholders have in Florida. A lot of it is the fact that if they do file suit and they are compensated on that claim, their attorney's fees are getting paid, and it's not a slice out of their pie, so to speak, on indemnity. So that's what's going to be the problem. So when you're in states where there's not fee statutes or great bad faith laws, when you have a conversation with a potential client as an attorney, you have to be realistic with expectations. And it's, look, this is a business decision. You have the potential of getting a roof 70% off versus coming out of pocket 100%. Yeah. It's kind of a decision you need to make. Those are the conversations that are had in states that there is no attorney's fees or good bad faith laws.
Which is the vast majority of states.
It is.
I mean, you could get bad faith at trial or something along those lines in most states, and you can get bad faith, extra contractual fees and all that kind of stuff in those events, but it's so rare, it's almost non-existent.
Right.
And the way that this reads, there has to be a breach of contract created and adjudged or decree of that from a court of law or appellate court. So it can't just be an agreement, or you can't just prove that they breached and then in a settlement get something else. You could always have a global settlement there where the attorney's fees might be considered part of that in reality, but this isn't going to be an automatic awarding of fees. It's one of the things that gives Florida the amount of leverage that it has as a policyholder. It's a big change, and it's not even listed as one of the major issues that was given to the senators. By the way, the highlighted senators are the ones that voted no. There was only 13 of them. If they happen to be in your district, you might call and congratulate them for standing up and being good people and not just being swayed easily. Just saying. All right.
Yeah.
So a breach must occur. The insured has established through an adverse adjudication by a court of law that the property insurer breached the insurance contract and a final judgment or decree has been rendered against the insurer. This is what has to be established. Before is just proving that there was a breach, but now a final judgment or decree has to be rendered against them by a court of law in order for the payment of attorney's fees to be approved. Pretty interesting. If I go down here, except as provided in section 4, upon rendition of a judgment or decree by any of the courts of this state against an insurer in favor of any named insured, under a policy or contract executed by the insurer, the trial court, or the event of appeal in which the appellate court shall adjudge or decree against the insurer in favor of the insured a reasonable sum as fees or compensation for the insured or beneficiary's attorney, the one that's prosecuting the suit. But it says, except for as provided in section 4, section 4 says, in a suit arising under a residential or commercial property insurance policy, there's no right to an attorney's fees. So you can't get it even if you get the court to have any kind of a judge or a decree. If it's a surplus lines, that doesn't count.
You know how long it typically takes from beginning to end for a policyholder to actually get a judgment in the court of law? You know, I'm talking about in of a jury. I mean, it varies, but we're talking it's a yearly type situation, years to get there. So when you have these insurance companies that are trying to settle and they're trying to throw, let's just say 60 cents on the dollar at a policyholder 6 months in versus going all the way to the end, which could be another 2 years, you know, I mean, that's a hard decision for that homeowner to make. It truly is, because it's not a quick process. You know, it's just not. And I'm just seeing where they're just taking little baby steps here and here, knocking, I guess right now, giant steps, knocking things out. Like, for instance, like I said earlier, it used to be, you know, I know things change and have changed, but, you know, landfall 3 years from our named hurricane, you know, Irma, back in Irma days, that's what it was, you know, so they're just chipping away is what's happening.
No, I didn't ever think that this would happen. It's one of the best things for consumers in Florida, the fact that the attorney's fees can get paid. If you are put in a position where you need an attorney to recover the benefits that are part of your contract, then you won't have further financial harm, and that's going away. Clint Moore, who's been on this show talking about the last special session bill, says an arbitration decision doesn't count to prove breach either. And that'll become more common since it was presented as a discount on premium like MRPs. Actually, I think that the language specifies appraisal awards can be used as evidence of a breach, but it doesn't itself create the cause of action. So I think it specified appraisal, but maybe you're saying that because arbitration wasn't named, then it doesn't get to be used at all. But we're going to get to arbitration. We're going to get there. Flood insurance. If you have or are required to have citizen insurance, because you can't get insurance anywhere else, which is the whole point of citizen insurance, if you have citizen insurance, if flood insurance is not secured by the applicant, the risk will not be eligible for coverage by the corporation. The corporation is Citizens. If you don't have flood insurance, you don't get any coverage in your policy at all, even if you're not in a floodplain. By the way, that's not flood insurance through Citizens. That's flood insurance by a third party, because Citizens doesn't sell flood insurance. So if you don't buy flood insurance and you have Citizens, then you're screwed. No coverage whatsoever at all.
Legislators, they're putting more money back in the flood insurance companies that are getting hit with, Ian and all these other ones, and they're making it mandatory. Sure. And they're just putting more money back. They're refilling the coffers is what's happening.
Now they are staggering how quickly you have to get that flood insurance coverage. So, and it depends on the value of your property. So in 2024, it's anyone whose value of the property is over 600,000 will have to have it. And then it goes down from there. But if you are already in a flood hazard area defined by FEMA, then you have to have it immediately after April 1st, 2023. Now, Larry asked an interesting question. Is anything grandfathered if passed into law only applies to claims after Hurricane Ian?
I believe this is a January 1st, 2023 when all this is implemented.
Yeah. So the claim will have to have been filed after that time for any of this to be in effect on it, right? Some of the items in here have special provisions on that, but as far as attorney's fees would go, I think it would matter when the claim is filed originally and not necessarily when the case is filed or the suit is filed.
And it might, if you think about it, the date of loss. So do any of these Ian claims have anything are they going to be affected by this bill? Does that make sense? Because the bill specifically says 12 months, you have to file a claim within 12 months of the date of loss. 18 months from the date of loss to supplement. I'm pretty sure that's what it says.
Yep. 1 year after the date of loss, you have to file that claim. Now, it doesn't necessarily say it. And this is, we figured out during the show, this is for surplus lines specifically. But it is 1 year from the date of loss. And this will go into effect January 1st. So it doesn't say anything about the date of loss having to have occurred already before this would count. I think it would be any claim filed within that period of time. So rather interesting there. If you have Citizens Insurance, by the way, there is going to be charges added on top of your already exorbitant premiums and on top of your necessary flood insurance. They will charge you any deficits back. If there's any deficits, up to 15% of your premium can be charged to you annually, plus additional funds. So I'm not going to read all the language that I've highlighted in here, but it gets interesting. The aggregate amount of emergency assessment levied in any calendar year may be less than, but may not exceed the greater of 10% of the amount needed to cover the deficit, plus interest, fees, commissions, required reserves, and other costs, or 10% of the aggregate statewide direct written premium amount for the prior year, plus interest, fees, commissions, required reserves, and other costs. How much will it actually end up costing you to have Citizens Insurance? I don't know. But if the whole point of this bill was to reduce insurance rates in the state, I don't think this is doing that. It's actually adding on premium charges right now. And on top of that, if you fail to pay any of these emergency assessments, it's going to be treated as a failure to pay your premium, which means no coverages. You won't know how much you're going to be charged. By the way, if there is any surplus, if the amount of any assessment or surcharges collected exceeds the amount of the deficits, do they send the money back to the policyholders? No. The money gets put back into the corporation in a reserve. It can be used by the corporation to pay claims. The money that you are paying them extra on top of your premium, the money that you're paying already to pay your claims, is going, if there's any excess that's given to them, when they charge you extra money, if they have a surplus, they can just use that money to pay claims. Does that piss you off? Pisses me off. There are some silver linings in this.
This is big stuff, man. This is, I mean, these are just huge ticket items. I just got to say this because I've been at Capitals and negotiated bills and all that jazz when it comes to the first party property insurance. There's got to be some type of negotiation on this. I know that, it passed the Senate, an hour and a half ago?
Yeah.
I feel like there's going to have to be a negotiation on some of these terms. There's got to be a give some, take some. I mean, this bill is, I think you and I, before we hopped on, maybe pointed out one or two things that might be a positive for the policyholder, but this is so insurance company heavy. It kind of makes me sick.
So this is the record for the Florida Senate right now of all the amendments that were proposed, considered unfavorable. And these are the votes on the floor for all of the amendments that were proposed. All of them failed, a few were withdrawn. Not a single amendment was approved. And because they're doing this in a special session, I mean, they gave the bill language 4 days ago, 5 days ago. That's how much time you have. This happened exactly the same way in the last special session. A few days to take a look at the bill language, and then it's voted on the floor because it's an emergency thing. We have to fix this now.
That's the difference between insurance companies and consumers. They can do this stuff overnight and push it and get it passed. Consumers don't have that ability. I mean, really, it's pretty crazy. There's
so many amendments that were offered. So many of them. So in case you wanted to see this, there were, it was voted on 3 times today. There was a few amendments that were voted on where they got no's on the floor. And then it was passed at 4:53 p.m. on the Senate floor, just on the Senate. So this isn't law yet. Scott Moreland is saying they were good amendments. I bet they were. I bet a lot of them were pushed by FAPIA and other organizations like this. I don't know. It doesn't really tell me which amendments were whose. It does say who presented those amendments. But it's really, really rough. It would be nice to get a claim paid in 4 days. Yeah, it would be. Yeah, it would be. All right, let me go back to the bill. Some of the silver linings in here. The insurer has less time to do stuff in this bill as well. They have to give you communication within 7 days that they've acknowledged receipt of your communications instead of 14. That's a big deal. But this isn't enforceable unless the Financial Services Office determines that there is systemic issues. So this isn't something that they're going to do anything about on an individual claim basis. Which is kind of a shame. Insurer will allow within 7 days after the insurer receive proof of loss statements, the insurer shall begin the investigation as is reasonably necessary.
Wait, so a regular homeowner is supposed to have a sworn proof of loss form sitting on their kitchen counter. And so they have to file it and then they start their investigation. That makes no sense.
Well, maybe you know better than I do, but as far as I understand it, proof of loss statements is not necessarily the same thing as a proof of loss form. Would any kind of proof of or evidence provided, would that be a proof of loss statement?
Well, what's the difference between that and the prior highlight that you went over about filing and they have to acknowledge?
So this is acknowledge of communication.
So on insurer receiving communication with respect to a claim, the insurer shall within 7 calendar days review and acknowledge.
All they do is acknowledge receipt of the communication. They don't have to respond really.
Yeah. I think acknowledging receipt's kind of a response, but it could be just an automatic response from any carrier, right? When I see proof of loss, my mind automatically goes to sworn proof of loss. But if they're talking about proof of loss as in just evidence, photographic damages, okay, I see the difference. But do you see what I'm saying?
Yeah.
When it comes to the proof of loss?
No, I agree. Now it does say statements though, so I know that I would think that there is a difference there and that it could be utilized that way. And this language has been there before. This isn't new language. It's the change from 14 days to 7 days that's new language. So there might even be some kind of judgment or statement from a court of law saying what the difference is. You might take a look. I don't know. Maybe it's one of our audience members knows.
And now, again, when I hear proof of loss, I automatically go to sworn proof of loss. But yes, there would be a difference.
Yeah. So Scotty says that one of the amendments was alerting policyholders to the changes being made on their Bill of Rights. And there is changes on that, which I didn't bookmark that because I didn't think it was as important as some of these other things. The insurer must conduct any such physical inspection within 30 days after its receipt of proof of loss statements. Again, statements. But instead of having 45 days, they got 30 days. And they got rid of the hurricane deductible stipulation. And then it starts to talk about some weird shit. They don't have to investigate physically the loss. They can use digital formats of the loss, some of which is really interesting, like a driverless vehicle. Have you ever seen one of those Google cars driving around with the stem up there with the camera up on top, and they're taking the 360 images? They're going to put it on Google Earth so you can take that little dangly person, throw them somewhere with your mouse and be in that spot.
Yeah.
Dangly people. I'm picturing drive-by inspections with a car like that. I don't know if that's true. That's just what I'm picturing. So they're giving people the option to provide digital information, but this also gives desk adjusters the ability to make claims determinations from photographs only. Now, I know you guys that have been watching the show for a while understand that I'm not a big fan of the desk adjuster review situation that's going on right now. Hague's been training and certifying desk adjusters for desk adjuster reviews, and they're the ones that get to determine whether or not there is coverage based on two-dimensional photographs, which is not good for a lot of types of loss. And they're denying claims that should not be denied as a result. This codifies the ability to use that system to make claims determinations. The insurer may also allow the policyholder to use such methods to assist in the investigation of the loss. So policyholders can get on a virtual camera type thing, maybe even like a Zoom call, and show them the loss, possibly improving the investigation time, possibly getting paid faster as a result. Who knows? So this could be used in a beneficial manner. My internal skeptic says it won't be. And this doesn't prevent the insurer from going in person. So it doesn't prohibit the insurer from assigning a licensed adjuster to physically inspect the property, which would be nice. If there is any determination that some of the electronic methods that have been sent in are used in a fraudulent manner, then it will still be considered an act of insurance fraud.
Hey, Matt, I was doing a little research on Westlaw, and there's a couple cases out there, but they're pretty much tying in a proof of loss statement as a sworn proof of loss. There was a case 2021 People's Trust where
it is a sworn proof of loss.
They're tying it in as a sworn proof of loss, and I just went and looked at a couple of on my template bank, if you will, of sworn proofs of loss from different carriers, and a lot of them say sworn proof of loss statement or statement of sworn proof of loss. But hey, that's going to be litigated, at some point, where it really comes out and makes defines that.
Well, fun.
Yeah.
That does eliminate a lot of what I saw as an opening. If that is how the courts have interpreted it, then there's no getting around that.
Well, I think you could say, and this is me just being really, you could say a sworn proof of loss is a proof of loss statement, right? I think it would fall under that umbrella.
Yeah.
So anyway, interesting.
So the insurer must provide to the policyholder a copy of the detailed estimate of the amount of loss within 7 days after the estimate is generated by the insurer's adjuster. What they changed was you used to, after receiving such a request from the policyholder, the insurer must send any such detailed estimate to the policyholder within the latter of 7 days after the insurer received the request, or 7 days after the detailed estimate of the loss is completed. This doesn't require any request. They just have to send a copy of it within 7 days after it's created by the insurer. This is a good line. I agree with this. There is information that the carrier has to maintain now, additional information they didn't used to. So they have to keep a record of all claims records, including dates of any claim-related communication made between the insurer and the policyholder or their representative, the insurer's receipt of the policyholder's proof of loss statement, any claim-related request for information made by the insurer or their representative. By the way, that doesn't include contractors. If you're a contractor watching this, you are technically not a policyholder's representative. Any request made by you doesn't trigger any of the timeframes that are in here. Just so you're aware. Any claim-related inspections of the property made by the insurer, including physical inspections and inspections made by electronic means. So they have to keep records of all that, which is good because now electronic means are available. Any detailed estimate of the amount of loss generated by the insurer's adjuster, any detailed estimate. So if there's multiple estimates, does that mean that they have to keep copies of all of them? Any revisions that were made? That'd be interesting. Beginning event of any tolling period provided for, and there's a whole tolling period new thing in here. The insurer's payment or denial of the claim. All of this has to be tracked. And some of this information wasn't required to be tracked before. And I wonder if this will provide the insurance investigations to have more detailed information when they investigate a carrier for systemic issues. So I think that this is a good thing too. They do define factors beyond the control of the insurer that give the carrier the option to ignore the statutory timeframes to investigate, acknowledge, all that kind of stuff. And it basically specifies a state of emergency declared by the governor as one of those factors beyond the control of the insurer. So if you have a state of emergency, then these timeframes probably won't have any teeth. Anything that the policyholder or the representatives do which constitutes fraud or lack of cooperation or intentional misrepresentation regarding the claim for which benefits are owed is also considered something outside the control of the insurance carrier and allows them to ignore the timeframes that were established. So it has to reasonably prevent the insurer from complying with those requirements. But if they ask you for information and you ignore it, that actually is part of the new tolling information that's in this bill. So if they are asking you as a public adjuster or asking the insured for information, that becomes an issue for their requirement to meet some of those timeframe requirements. Within 60 days after the insurer receives notice of the initial reopen or supplemental property insurance claim for the policyholder, the insurer shall pay or deny such claim or a portion of the claim, unless the failure to pay is caused by factors beyond their control. So you have 30 days less to pay undisputed funds. That's a good thing.
For sure.
Let's see here. Let's talk about mandatory binding arbitration. A property insurance policy issued in the state may not require that a policyholder participate in mandatory binding arbitration unless all of the following apply. The requirements for that are contained in a separate endorsement. It can't be part of the policy. It needs to be a separate endorsement, I guess, to highlight it. I don't know. Honestly, I would prefer it to be part of the policy personally. Maybe even both. The premium the policyholder is charged has to be discounted. There have to actually be a credit or a premium discount if this is part of the policy. Doesn't say by how much, unfortunately. And the policyholder has to literally sign a form electing to accept it. So if you can't find a signature on this document, then it doesn't count. There are a lot of things that require a policyholder signature for those endorsements to actually be utilized or triggered. And I find that if you get a full copy of the original policy application with your certified copy of the policy, and technically the policy application is a part of the policy, then you can find out if there are signatures on some of these documents. And it may or may not turn on or off some endorsements.
And hey, Matt, can I give you some foundation for these?
Yeah.
Must apply is when you go to law school, contracts 101, the court ultimately does not want to interfere with two parties coming to some type of agreement. Even though they don't believe that it's a fair agreement or the parties, one party or both parties should go into that agreement, they don't want to make it illegal and step in between a negotiation between two parties. So to me, this is what it's trying to say. The state is trying to say, we don't think you should have mandatory arbitration, but Mr. Policyholder, if you agree and sign off on it, we're going to let you do what you want. That's to me, because it's making hurdles to actually get there. And so, and right now, non-binding arbitration in Southwest Florida and a lot of other jurisdictions in Florida, it's a mandatory thing before you actually even get to trial, where they'll do a non-binding arbitration. That's already a thing. But
and plenty of jurisdictions or plenty of policies will require mediation that's not binding as well before trial. And that's not a bad thing. Actually, I've come to like the mediation process quite a bit since I've been in Florida. It's not binding, but you do get to understand the opposing side really well before you do anything that might involve litigation.
Yeah, and it could be binding. You got to accept the offer.
If there's an accept, but you can always there's a period of time where you could change your mind.
Yeah, again, people are going to come up with other terms to and agree, and then the courts won't interfere, even though they might think it's unfair.
Yeah. The policyholder has to sign a form electing it, and they have to be given information that says that they are giving up their right to a trial by jury. The insurer, there has to be something in that endorsement that says the insurer will comply with mediation provisions before the initiation of arbitration. So you might have to go through mediation first. And the insurer also offers a policyholder policy that doesn't require the policyholder to participate in mandatory binding arbitration. This one I like because it means that not every policy, there isn't going to be a single carrier that can offer only a policy that requires binding arbitration. But if you are price shopping, guess which policy you're going to get offered. One of the things that we expected in this bill isn't there.
Hey, just real quick, Matt, do not let homeowners, if you're a public adjuster, do not let homeowners buy a policy in which there's mandatory arbitration. It's going to make that policyholder 100% spend money on an attorney, spend money on witnesses, and document everything. Don't let them do it, is all I'm saying.
I don't think most people understand what arbitration is. Can you explain roughly how that process goes?
Okay. So if you go to trial, there's two different types of trials. You have a jury trial in front of your peers, or what you call a bench trial, in which the judge makes a determination and it's binding. Arbitration is like a bench trial. It is a bench trial. But you're not in a courtroom. But it's just like mediation in the sense of going to a arbitration center and you present your case. You call up witnesses. You provide evidence. You provide documentation. You have opening and closing statements, just like a bench trial. The other side, the insurance carrier, who has an army full of attorneys and an army full of adjusters, is going to do the same thing. And then the judge, or the arbitrator, if you will, who typically are ex-judges, make a ruling on the evidence that's provided to them. This literally is forcing these policyholders to hire an attorney, to hire expert witnesses, and so forth to prove their case. It's not a good. I'm telling you, that's a lot of money out of pocket. And let's just say we're talking about a $20,000 roof claim. They're going to be out of pocket at least 50% of that if they hire an attorney and go through the process and hire the experts and gather all the evidence. They're already in a bad spot.
So it would actually cost more than getting an attorney and going through a typical suit situation.
Potentially. All I'm saying is it's definitely going to hurt.
Lawmakers know that.
Yeah. So that's the difference. Mediation is where you go and you negotiate back and forth and see if you can come to an agreement. If you don't, no harm, no foul. If you do, the case is settled. Arbitration, at the end of it, there will be an order, there will be a ruling, and one of the parties is going to win and one of the parties is going to lose.
And now it's binding if you sign off on this.
If you sign off on it, don't let any homeowner or commercial building owner sign off on that.
Terrible. All right. Assignment of benefits is killed. No more. Now, if you execute a contract for assignment of benefits before January 1st, you got what, 3 weeks? If you can get one done in the next 3 weeks, then it's fine. Outside of that, it's done. There's nothing you can do. This is not a great thing. There are a lot of problems with assignment of benefits. There are a lot of contractors that take advantage of these situations. But the reality is, policyholders take on less risk for a lot of cases, for a lot of situations, if they hire a contractor that assumes that risk under an assignment of benefits. So who would you rather assume the risk? A policyholder or a contractor? So Scotty says that the problem for public adjusters is we usually get involved after things go south, not before. We do advise our clients who intend to find new coverage what to avoid, but often they don't reach back out to discuss. It's true. It's a good point. How much does arbitration cost the insured on an average residential hurricane claim?
It could vary. It could. It matters if you have that attorney on an hourly, if you have them on I don't see many doing a flat rate because they don't know what they're getting themselves into, or they might be on a percentage. But
is a public adjuster able to represent an insured during arbitration?
I would say the public adjuster is going to be one of the witnesses. I feel like that's a legal scenario.
Seems like a legal proceeding.
Correct. I feel like a PA would be in a gray area trying to go to arbitration representing. I feel like you need a license for that, a legal license.
Yeah, this is an issue. So let me bring this up again. Here's the assignment of language or assignment of benefits language. You've got until January 1st to get that done. After that, the assignment is gone, and it'll go through the fact that except as provided in subsection 11, a policyholder may not assign in whole or in part any post-loss insurance benefit under any residential property insurance policy or commercial property insurance policy as that term is defined, issued on or after January 1st. Does that include surplus lines? I don't think it does, because they separated surplus lines out several times, even though this says any residential or any commercial. But they separated surplus lines as a separate thing throughout the rest of this document.
Here's what I see. Okay, I will say the AOB laws in Florida are not perfect. I think everybody that's in Florida or is in first party would agree. But, you know, there's ways to fix that rather than all or nothing, right? Because that's what this bill is doing. They're wiping AOBs out. What does this do? Because there are a lot of contractors that treat the AOB how it should be treated. And they're good contractors that they're putting the roofs on, they're doing the work, and they're assuming the risk and going at, you know, getting the insurance company to pay for it. What has happened? You take that out now of the equation of people getting their roofs on faster. You have now this 18-month supplemental timeline. You see what's happening here? By little chunks, it's now it's making just a small window of getting paid on your claim versus having a good contractor that is ethical and coming out and replacing your roof and going after those supplements within a month or 2 months after the loss versus now you got all this. It's pretty scary. That's what they're doing. Yeah. They're chopping this down.
Yeah, they complained about all the locusts that were going to come in and the public adjusters that were going to come in and take over a claim and drag it out and make it longer because we're getting involved. Reality is these situations actually speed claims up, and they're removing this benefit for policyholders, this option that they have. Now, what if you're selling a house and there's damage? There is the ability to assign the benefits to the buyer of the home. Not anymore. Can't even do that. So it doesn't even carve it out specifically for contractor assignment of benefits. Now it's through real estate, possibly. I know a lot of public adjusters that go out and they buy distressed homes and they assign and they get the assignment for the claim and they handle the claim after the fact, remediate the house and then resell it. So there's a lot of public adjusters that were able to do that, and it allows policyholders to unload a house that has all this damage and not have to deal with all that crap and move on with their lives earlier. This isn't going to allow that anymore.
And I hear it all the time where insurance companies are complaining, oh, they're not going to get the work performed. If we settle this case, they're not going to get a new roof. You know, things like that. They complain about that constantly.
They do.
They do. And now this makes that even larger. That pool of people that aren't going to get their roofs done and completed after litigation or whatever it might be, it's a bigger pool now. And also, there's jurisdictions in the state of Florida that say if you have not replaced your roof, you're only due ACV benefits after litigation, and if there is like some type of court judgment. There's some jurisdictions, some opinions, if you will, from courts that have said something to that effect. So that's going to, who does that hurt? Policyholders that can't pay $50K out of pocket to replace their roof.
Yeah.
3 years later after litigation, they're only getting ACV benefits.
Sarah Parker, who's been on the show before, always good to hear from you, Sarah. She mentions that the doctors and the auto shops, they all have assignment of benefits that are effective. Now, this is for residential property and commercial property insurance, so I don't think that would affect the auto shops or the health insurance policies. But if there is a way for them to be effective for those individuals, why couldn't they have been effective and regulated in the same way?
And that's what Sarah's trying to say. She's like, look, this is used in other industries within insurance. Why is it being deleted in property?
Okay, so the language here also gives the ability to take a look into the policies that have already been approved in the state. If there is any need for I always want to call it a Department of Insurance. It's the CFO, the
Florida Financial Services.
Florida Financial, FFO, whatever. The Financial Services Office, FSO, gives them the opportunity to go back into these insurers and investigate some things if certain things have occurred. So if there is a general business practice where the insurer has refused to pay proper claims without just cause, or without just cause compels to accept less than the amount due them to employ attorneys, or to bring suit against the insurer to secure full payment, or compelled insurers to participate in appraisal. And that's the new language, under a property insurance policy in order to secure full payment or settlement of such claims. If they do all that, then it gives the CFO the ability to take a look under a market conduct examination at what's really going on. But that market conduct evaluation has to be initiated within 18 months after the landfall of a hurricane. So will we know within 18 months that any of this stuff has occurred? How long does it take, you think, for policyholders to realize they're really getting screwed around?
Well, now it's got to take at least sometimes 12 or 18 months before now. But no, I think if it's a smart policyholder and they filed a claim right out the gate, like for instance on Ian, I think right now there's a lot of policyholders in Florida that are thinking that they're getting jerked around. But at the end of the day, they got to have somebody who's a licensed expert or a licensed PA to say, look, they're not adjusting your claim fairly, because they don't do this every day. It's hard for them to know that.
So the only thing that this examination is really going to focus on is a compelling appraisal to gain benefits of your policy. So if they do a market conduct examination, then the name of that insurer gets to be basically talked about. So it says the name of any insurer that's subject to the market conduct examination that found the insured exhibited a pattern or practice of one or more willful, unfair insurance trade practice violations with regard to its use of appraisal specifically, including but not limited to compelling insureds to participate in appraisal under a property insurance policy in order to secure full payment, and a summary of their findings of such market conduct examination. They will have to publish that. Publish on the office's website a list of all insurers referenced in that paragraph and a link to the market conduct reports regarding those insurers. And if there is a breach of contract action, a property insurer may make a joint offer of judgment. No, that's not what I was looking for. Where am I looking? Where is it at? It gives the office, maybe it's under appraisal one, gives the office the ability, the Department of Financial Services, the ability to remove the ability for the insurer to demand appraisal for up to 2 years. Now I'm having trouble finding the specific language. So that's
what was it, Matt? Something to the effect of a carrier cannot invoke the appraisal provision within X amount of time.
If they are determined in a market conduct examination to, without cause, force people into appraisal just to gain the benefits of their policy, then the Department of Financial Services may determine that that insurer is acting in violation and can remove that insurer's ability to demand appraisal altogether for up to 2 years, which is great. I don't know why it's specific to appraisal, but it's better than nothing. I think that's good. So if they're trying to reduce the amount of litigation, they're trying to reduce the amount of dispute resolution that is being utilized and speed things up, then they are attacking all of that and then opening up arbitration instead of shortening that a little bit. So that doesn't really make sense. I don't know. Someone was asking, Helmuth is asking, when was this announced? So the bill dropped 4 or 5 days ago. The Senate voted and passed this today. It hasn't passed the House yet. If it goes into effect, if it passes the House, and is expected to, in its current rendition, and it will go into effect January 1st, 2023, just in a few weeks. To be clear, not a single client of mine is aware of all this happening. They find out when I explain it to them. There are media stories mostly posted online, easy to miss. It's so quick. There's no time for everyone to get up in arms about it. There's no time to organize a resistance.
And Matt, let's drop it right before Christmas. And all the holidays and all the holiday season. Like, you can't tell me that wasn't strategic. I mean, come on.
Merry Christmas, policyholders. Jeez. So if the lack of attorney's fees is the big issue, and it is, and it's not even described in the synopsis that's handed to the Senate and the House of Representatives. It's not even in the summary. If that is the big issue, how does that change the environment for Florida? You've been doing 2 states, one that pays attorney's fees and one that doesn't. Do you think that one issue alone, and I know there's other differences, a lot of other differences, but from that one difference alone, what state would you rather be a policyholder in?
I mean, you have to say the state in which, if you have to file a lawsuit to protect your property and what's owed under the policy, and you have the capability of obtaining your attorney's fees because you were forced to file a complaint with a court, I know what state I wouldn't be in. There's no doubt about it.
There is a lot of problems in Florida. I know of prominent public adjusters in this state that have told me that they don't care if there's damage on a property. They just need to file a claim because they can win with technicalities. They can win by the carrier not acknowledging communication in a certain period of time. All the little technical details that the carriers are supposed to do, if they don't perform any of those actions, just one of them, they can win because the attorney's fees get paid. And there are a lot of public adjusters that act as runners for attorneys, and they're just signing up claims, and they do the bare minimum that's required of them and hand it off to an attorney. And they don't really work the claim. They don't really go through all the necessary actions. They half-ass their job. That is the reality. It's a shitty state. There's a lot of bullshit on the policyholder advocacy side because there's a lot of leverage. We don't have to do as much to win. That doesn't mean that you should take away the policyholder's main leverage. It's a shitty situation. Reality is the bad PAs will probably go away. The ones that are doing the attorney running, that's not going to work anymore in this state. So will you have to do a better job as a PA? Yeah, you're actually going to have to do your job. That's a good thing. But the policyholders are the ones that are screwed over on this. So assuming all the PAs and policyholder advocates actually did things correctly and didn't take advantage of the system, then this is a great system the way it is, and it shouldn't be changed. But people are people, and people take advantage. And these are the consequences. We should not file frivolous claims. That is a ridiculous thing.
Absolutely. I'm with you.
This is crazy.
Do you remember, if I got the year wrong, forgive me, but I believe it was July 1st of 2019, the state of Florida had AOB reform, and they changed the AOB laws. It was a huge deal. Huge deal. Look what they just did. I mean, they hit it so hard on the attorney's fees where they're getting away with all these other big ticket items, limiting the time to file a claim, limiting the time to file a supplemental claim, hitting on appraisal, hitting on removing AOBs, throwing in the potential to have binding arbitration. Citizens, oh, by the way, you're going to have to pay the flood guys if you want to get insured by us. I mean, these are just, it is a lot that's going on here. And we made, and I say we, the insurance world made a huge deal about I know it was July 1st. I think it was 2019 when they had the AOB reform in Florida, where they changed it up a little bit. That was a massive deal. This is 10 times as big as what's going on back then.
It's insane. The goal here, I think the way that they're selling this is to reduce the cost of insurance in the state. I don't see where that's really going to happen in this. So I know when I moved to Florida, my insurance rates tripled, even on auto insurance, which is weird. I wasn't expecting that. I don't think that the rates are really going to be reduced. The last special session was supposed to force the insurers, if they get involved in the RAP program. And there is yet another, by the way, reinsurance program introduced in this. We didn't even get into because I don't think most of you really would care about that. That's part of the audience. It's 200 pages. There's a lot of shit in here. But that RAP program didn't reduce the policy amounts. It didn't make any difference. We got hit with a hurricane, and now we're in a situation. I don't know. This is not the real answer, but it's the answer that we're about to get, because James was asking, when does the House vote on this? Well, they have 2 more opportunities to vote on this, tomorrow and the next day, or there's 2 more special sessions planned. It could be either of those days. It's already gone through a second reading in the House. We'll probably have a third reading tomorrow, and I bet it will be voted on the floor tomorrow. That's my guess. And since none of the proposed amendments were approved or voted on, it's probably going to be this very same version. And if it passes that, then it's law. And then it's up to the governor to veto it. I hope he does. Kind of doubt it. Who knows? This is a rough situation, guys. I think this changes the entire environment of claims handling in Florida for the worse. But there are a few silver linings in here. You have any closing statements? This is such a somber freaking episode, man. There's just too much bullshit in this.
I think what you said about 5 minutes ago was a good, closing statement, where in every industry you got some bad actors and so forth. There are people taking advantage of the system, and they are swinging the pendulum way across to the other side to balance this back out. And people that aren't in this every single day, this first party insurance world, and I'm talking about the legislators that are voting on this, that have no idea and are passing this, how much this is truly going to affect policy holders across the state of Florida. It's going to affect them tremendously. And I know that they're using, because you always got, legislators, they always got to have that dangling carrot for the reasoning of passing this. And you hit on it, Matt. They're going to say, this is going to allow every policyholder across the state of Florida to be able to afford private insurance with the carrier of their choice. Is it really? That's the question.
What is it though? Yeah. I think that the rates continue to go up. If you happen to have Citizens Insurance, which a lot more people will have, then your rates are definitely going way up, and you have to have flood insurance. And there's going to be an extra bill every year that you're not expecting, because there's always going to be a deficit. They always seem to find a way for that. So one last thing, James asked if this affects Hurricane Ian claims. Part of it does. Supplemental claims have to be filed within 18 months of the date of loss. So can't sit on it. Get those claims opened. And if they happen to close the file without you knowing about it, reopening has to happen within 1 year.
Matt, you know how many contractors in the state of Florida are going to have armies getting AOB signed for the next 3 weeks?
Oh my God.
I mean, seriously, it's
That'd
happening.
be great. Actually, it'd be probably a good thing.
It's happening.
Assignment of benefits is not a bad thing in and of itself. Anyway, all right, we'll call it quits. Remington, I'm glad to be back in a studio here. It seems a little bit dark in this studio. I'm going to mess with the lighting a little bit, but we're back in action. I think next week we're doing an episode next week. Yeah, next week we have an episode on the 20th, but the week after that we're going to take off for Christmas and be back in here for January. So we'll see you guys Tuesdays at 6 going forward.
And hey, if this does pass, whatever the final version is passed, I think it might be a good idea if some of these other items are knocked out, so to speak, before it's passed. I think touching base on this again, it's that big, next week.
I think that's probably a good idea. There's definitely things in here that if I read through it again, I might even see different stuff.
Yeah.
This was based off of one full reading and a few little highlighted sections. So share this episode with as many people as you can, especially if they're in Florida. All right. Thanks, guys. We'll see you next week.